Hello, fellow traders and investors, and welcome to another edition of our weekly As Good as Gold update. I'm Dilin, the research strategist here at Pepperstone. As we delve into the market sentiment, it's clear that gold is currently facing some headwinds. The primary concerns are the robust US dollar, as well as the looming possibilities of another interest rate hike by the Federal Reserve in November. To gain a better understanding of how these factors might affect gold, we're eagerly awaiting the release of the US CPI data and the ECB meeting later this week. Let's kick things off by taking a closer look at how precious metals have been performing recently. Over the past 5 days, gold has dipped by a marginal 0.2% against US dollar. This contrasts with the remarkable 1.8% surge in the palladium USD pair, with the US dollar index notching up its 8th consecutive weekly gain as of last Friday. Gold against US dollar has spent the past few days trading in range, exhibiting a consolidation pattern above the 1914 level. However, it broke below this support recently and is currently attempting to mount a recovery. All eyes should be on whether it will extend its decline below the critical 23.6% Fibonacci retracement level, situated at 1910, derived from the previous downturn. If this level is breached, the gold price might find its next support at 1885, a level that served as the local bottom back in August. Apart from US dollar, gold is also showing a bearish outlook against various other currencies, thanks to a hawkish speech by the governor of BOJ regarding monetary policy. The gold-yen pair is converging towards its previous breakout level, observed from April to mid-August, currently trading at approximately 280k. Furthermore, it's trading below its 5-day exponential moving average, suggesting that shorting gold against yen in the near term could be a prudent strategy. And on a related note, the Aussie dollar had witnessed the most significant appreciation against US dollar, boasting an impressive gain of 0.8%, making it an attractive option for shorting gold. And the gold AUD pair, after rejecting the 3036 level just last Tuesday, is now finding support at 2977, a level that once acted as resistance back in August. The British pound had also been considered as an attractive choice of going long on gold over the past 3 weeks. However, even when paired with the currency that's been the weakest performer, gold still struggles to assert its dominance. The gold-sterling pair has been repeatedly rejected at the resistance level of 1538 and is now establishing new support approximately 10 points lower. Another noteworthy observation is that all these pairs are currently trading within a rather confined daily range, represent around 1/4 to 1/3 of the highest daily range seen year to date. So this suggests that market participants are eagerly awaiting macro data to be released to provide a clearer signal. Now let's delve into the factors causing downward pressures on gold current price trajectory. Firstly, we witnessed some investors venturing into the US Treasury market from the shorter end of the yield curve, with the 6-month yield at 5.5% and the 10-year yield at 4.3% at the moment. And the market still participates another 25 basis point interest rate hike by the Federal Reserve in November. In such a scenario, investors may be more inclined to hold US dollar rather than gold, considering the high opportunity cost and also the uncertainty surrounding interest rate decisions. Secondly, the persistently high real interest rate, ranging from 1.9% to 2%, remain a cause of concern. Lastly, there's a reduced expectation of future rate cuts. In contrast to the roughly 1.18% expected rate cut 2 weeks ago, the rate cut expectation for 2024 has now decreased to 1.02%. Strong data on US ISM services and labor market have pushed back the anticipated date of the first rate cut by 1 month, now slated for June next year. All of these factors collectively impose limitations on the upward potential of gold's price. On a more positive note, the US equity market has experienced a retreat, with the S&P 500 declined by 0.6% and the Nasdaq dropping falling by 1.1%. Apple stock price also saw a decline of 1.8% following a product launch event, which may have contributed to this downturn as well. Given the uncertainties prevailing in the equity market, gold is viewed as a more attractive option than US dollar for hedging against risk. Lastly, it's essential to highlight the recent upward movement in crude oil prices, with Brent oil breaching the $90 per barrel threshold last week. And in the short term, this surge in crude oil prices is indicative of inflationary pressures. It can adversely affect the price of gold, as individuals tend to gravitate towards holding US dollar to mitigate their hedging costs during such times. However, in the long run, if energy prices persist as elevated levels, the associated side effects will eventually trickle down to impact retailers and also consumers. In anticipation of potential economic downturns, people may shift towards gold as safe haven, thus supporting its price. Consequently, it's prudent to closely monitor developments within the energy sector for any significant shift. In summary, gold currently finds itself under pressure due to the strength of the US dollar and also the expectation of impending Federal Reserve rate hike in November. Nonetheless, the bearish sentiment in the US equity market is providing some support to gold. As we look ahead to the remainder of the week, traders should keep a closer watch on the release of the US CPI data scheduled for 10:30 p.m. AEST today. A robust CPI reading would potentially bolster expectations of a November rate hike. Additionally, it's worth noting that in recent instances, the price of gold has risen in 30 minutes following the release of US CPI data. While the past performance doesn't guarantee future results, historical trends can sometimes provide valuable insight. The European Central Bank meeting also looms as another event with potential implications for the gold market, as the market anticipates a rate decision to be announced tomorrow, which could influence the gold prices as well. So that's all for this week. Stay tuned with Pepperstone.